Hello, everybody. Welcome to Tuesday. The S&P 500 was down a little bit more than 0.8%. So fourth day in a row that the market's been down, down 0.9 yesterday. Really, if we go back, you can kind of see the genesis of this is when the Federal Reserve governor started to come out and talk about how they were talking, maybe we won't be lowering rates in December. And sometimes they do that just to try to get the market to, settle down because that helps with inflationary pressure. If people feel, that they have lots of money in the market, sometimes they're out there spending and that creates inflationary pressures to the upside. So, uh, I look at this as really, now we got all this news like today. If you look, it's kind of funny. Oh, the market is considering, the fact that AI isn't producing enough revenue or, all these types of things. And really, it just has to do with stretched out valuation. So you get a catalyst like, hey, we have to readjust the market because they might not have a, rate cut. Went from a 96% chance of rate cut to now basically a coin flip for December. And then all of a sudden that kind of moves everything else to the downside, whether it's cryptocurrencies or the stock market, because it had such a big run up. And I always use that rubber band thing. So, you stretch that rubber band, stretch. Eventually, when it does snap back down, it could snap back down pretty hard, which is kind of what it's doing here. I think we're down a little over 2%, or a little over 3%, sorry, for the month. Again, that's really a nothing altogether when you look at the overall stock market and the run that it has had from that low back in April all the way through to here. We haven't had a 5% drop, for example. So, things can happen. This could be the beginning of a big downturn, but you can't assume that every single downturn because most of them aren't. And so, what that means here is really probably just a pause. We're pulling back. You have to assume that at this point. We're not down that much. And we basically, kind of go sideways for a while, consolidate. All of these things are good things. And then maybe there's some kind of catalyst that gets things going to the upside. So, for example, after hours tomorrow, we have the NVIDIA earnings. I'd be a little surprised if that was a catalyst to the upside just because the bar has been raised so high. It's going to be difficult for them to really surprise to the upside. But there certainly can at least confirm some of the pieces that are out there. And then, of course, we got the jobs report that's coming out on Thursday for September. Again, I'm not sure what to think of that. It's not going to be the full jobs report. It's pretty delayed. I don't think that that's going to have a massive impact on much. Maybe in the short term it will, but I think that that'll blow over pretty quickly. So at this point in time, you have to continue to take a look at the fact that the stock market is in an uptrend. The primary direction is still up, and so you just kind of wait for these situations that we're in right now to kind of cool down and settle out and come across. And I don't think we are at a point yet where we know that the AI isn't going to work. There's too much money invested already into the build out of these data centers, and we're still just really getting started on that. The valuations certainly got overcooked, and this is a way to kind of bring that back down. But what will happen is it'll come down to a point where people say, wow, I wish I would have been in that before. I'm going to buy that now. And so we're starting to see some support in some of these areas. But, we got a ways to go, I think, before we still really see some of the more heavy buying that could come in. We'll watch for more selling. We'll see what happens as far as that go. But at this point in time, we're still in the primary direction up. And so we'll hang our hat on that until that starts to change. So anyway, that's what's happening today. Not a terrible day altogether, really. Again, I think these pullbacks are very important in a market that has been very, very hot. That kind of creates a situation where you don't get so far ahead of yourself, and we already are. That's for sure. We're trading at very rich multiples as a whole, but when we pull back like this, it allows some of that pressure to come off on those valuations and let earnings start to catch up possibly. So, we'll see how this plays. But anyway, that's what's happening today. Look forward to being able to talk to you again tomorrow. Thank you.